What's up, everybody, and welcome back to the High Performance Trader. I'm Joshua Salvetti, and today in this lesson I want to break down a very simple way for you to be on the right side of the market. Right? So in my beginning years as a trader, I used to struggle a lot. Right? When that morning bell went off, I had studied so many different strategies, so many different chart patterns and possibilities that when that bell would go off, I would literally go into freeze mode, straight tunnel vision. Right? And I wouldn't be able to properly gauge the momentum of the market. Right? So today in this lesson, I want to show you how moving averages, right, specifically on the 1 hour time frame, the 5 minute time frame, and the 2 minute time frame, have helped me tremendously with avoiding bad trades, right, identifying super high probability setups, engaging a really good pre-market plan every single morning. Right? So the day I want to be talking about is 8/28/2024. Right? We're going to be talking about SPY. First thing we're going to do is break out the pre-market plan. So over here on the Discord, you're going to see I post a pre-market plan each and every single day on SPY and QQQ. Right? And you'll see here I have a bullish and bearish scenario. Right? So for anybody that watches my videos, right, you guys know I focus really, I go extremely hard on not forming a specific bias until the market tells me to. Right? One of our key phrases over here at HBT is don't predict price action, react to it. Right? Identify and adapt to the market conditions. Right? And that's where this concept comes from. Right? It comes from not predicting anything, which means I have two scenarios. You know, is it going to happen perfectly? Right? The one of two scenarios? Absolutely not. Right? But I don't need it to. I just need a general understanding of which way the market's headed, and then I'll be able to properly gauge a high probability setup. Right? So over here you're going to see, here's my little graphical presentation, and let's go into the SPY pre-market analysis. Okay, so bullish scenario. I'm watching previous day high and end of day very close. Right? I like how they are lining up with the 50 EMA as well on the 1 hour time frame. Right? So if I whip out the chart right here, I have the 1 hour over here, right? And you're going to see we're talking about this day right here. So notice here, this is what it looks like in pre-market, right? So first thing I'm looking at here, right, I have my pit numbers, right, my previous day high, end of day, and PDL, right? So these are the three main levels I'm watching, right? And I'm super bullish above previous day high, right? So if we can get buying acceptance above PDH, I'm looking for longs targeting previous day high, all-time highs in this supply zone right here, right? So that is my bullish scenario, right? That's scenario number one. Once again, a general understanding of if buyers control the market, what's the highest probability move, right? It's going to be targeting those upside targets. Now, if sellers control this level, the sweet spot, end of day PDH, right? We call this the sweet spot, right? What happens here is going to help us make the move we need to make, right? So whoever controls this level, buyers control it, I'm targeting 56345, right? If sellers control it, I'm targeting PDL, and I'm targeting, what is it? This level right here, right? Very simple, guys. Notice how I'm just pulling from previous days, right? Because these levels had the volume. These levels have the liquidity, right? So sellers hold this. I'm targeting PDL. I'm targeting 55724, and I'm targeting 555, right? So very simple analysis. Now, what tools am I going to use? What set of criteria can I use to make sure I'm trading on the right side of the market? The moving averages, right? Notice here, I have the 50 EMA, that's the purple line. I have the EMA cloud, right? That's the 5 EMA, and that's the 20 EMA. And then I have this blue line right here. This blue line is extremely important, right? This is the 9D EMA, right? If you've never used this, it's time for you to study it, use it, put it on your chart. If you have any questions, drop them in the comment. This moving average changed my life. See, I started using moving averages with this moving average, the 9 DEMA. That's the double exponential moving average, right? It's super tight. It literally hugs price, but when it doesn't, like look right here, when it couldn't hug price, right? Look how far away we are. Notice the snapback, right? So if price is extended from that line, I call it unhealthy, right? An unhealthy trend. That means the probability of it continuing in that trend is very low, which basically means a reversal is going to happen. It is a very high chance, right? But if we're hugging price, right, like price action right here, notice no reversal, right? We get extended right here, price snaps back, right? And same with right here. Okay, so going into the day, right, we have our bullish scenario, and now we have our bearish scenario, right? We have bearish targets, PDL, 55724, and 555, right? So let's go back to that pre-market plan. Watching previous day high, end of day very close. I like how they're lining up. If buyers can hold these levels with open print, right? Very important. The open bell price, right? Whoever defends that, I'm looking to trade with, right? So in bullish scenario, if buyers can hold these levels with open print, I'm looking for longs targeting 563, blah, blah, blah. Okay, bearish scenario. If sellers hold the 1 hour 50 along with EOD in PDH sweet spot, right? This is the sweet spot. What happens at this level is going to guide us, right? I'm looking for short plays targeting 55950, 55829, which is previous day low. Notes, we have been consolidating in this range for the last week. Not much direction. So when we do break out of this range, I'm expecting a large move, right? Because we've been literally, like, notice the ascending triangle we have over here. If we get the breakout, we're going to get a large move down to 555. Okay. All right, so the bell goes off, right? I'm going to whip out the 5-minute. And to be fair here, Jerome Powell was speaking at 10 o'clock, right? So I did not trade the morning. I did not want to trade any erratic or unhealthy price action. Over here at HBT, we like to remain structured, disciplined. We like to act on our edge. That's not saying you can't identify an edge while he's speaking, but it's, I don't want to trade in an environment that is going to be erratic and it's going to be all over the place, right? But look at the price action, right? Notice here, we open, right? We get open print, right? We'll just identify that. Open print's at 56125. Notice how price opening below EOD, opening below the 50 EMA, right? If I whip out that 1 hour time frame, you're also going to see we close below all my moving averages, right? This is what you call a moving average crossover, right? We're above price. Now we've closed below the 50. Now remember, the purpose of this video was to help you guys gauge the momentum of the market. So if and when I see us close below the 9D EMA, that's bearish. Below the 50 EMA, that's bearish. If I see that green cloud turn red, that's bearish. These are tools, visual understandings, presentations that help me go, okay, I'm not trading long, right? There's no way I'm trading long until we either come down to PDL very quickly and we get extended from the moving average, right? But other than that, I'm not going to trade against the conditions of the market or the people that are in control of the market, which in this case is sellers, right? Look at this. Look at how well here sellers hold open print, right? Look at this. Price rips up, right? EOD rejects. Then we start to get this battle here at the open print. We start to get this mega sell-off, right? So once, just like I told you, I captured none of this move, right? I captured none of this move. It's not that I couldn't, or it's not that I couldn't have squeezed some money out of this. It's that I didn't like the environment. I didn't like the conditions, right? So to become a good, consistent trader, right, you have to have control, self-discipline. But more importantly, you need to understand what works for you, right? Does FOMO work for you? Does chasing a trade just because it's selling off work for you on a consistent basis? Absolutely not, right? So learn to identify which behaviors serve you and which ones don't. Chasing trades do not serve me, right? Attacking the market during Jerome Powell's speech because of FOMO does not serve me. Instead, sitting on my hands, remaining patient, waiting for my edge to present itself, that's what serves me, right? So market sold off, right? You can see I'm going to fast forward the 1 hour here. So the market looked like this, right? Notice here we get this large sell-off, and we're very extended from the moving averages when price was down. Let me just mirror that over here. When price looked like this, right? This is what it looked like on the 5 minute. This is what it looked like on the 1 hour, right? So in my mind, I'm going, okay, I don't want to long the market, right? Because once again, we're very bearish. We've closed under all my moving averages, right? And since we've, found this battle over here at PDL, right? There's a pretty high chance, because we broke out of that consolidation, that we're going to get that large move today. So I have my eye down here at 555, right? The daily time frame is extremely bearish. I'm using larger time frames to gauge what could probably happen today, and what the market's going to tell me whether she's going to be bullish or bearish up here at previous day low, right? So notice here, we start to come up to previous day low, and then we snap below it. This red candle told me so much. It told me that all these buyers here that thought price was going to reverse and go back up to that 50 EMA, it just told me that they got stopped out of their trades, right? This also told me that, we were this EMA cross, it was this close to happening. There's been countless times where I've longed that just because I thought, oh, the EMA crosses, they're crossing over, this is bullish, here comes the reversal. Absolutely not, I get smoked. What is a tool that can keep us from doing that? The 1 hour time frame 9D EMA. Look guys, if I'm below that 9, I can't long the market. I cannot long the market until I get back above that blue line. That's just what works for me, right? I've went through my journal, years of data, and I found almost 80% of my losing trades, I was fighting that blue line, that 9D EMA, right? So I've made it a rule where I only trade with trend, right? And I won't fight that 9, right? So when price looks like this, and I'm going, dude, Josh, this looks like a good long. Buyers took back these critical levels, right? Buyers are starting to invalidate bearish structure, right? This is becoming more bullish. Maybe I can long this up to the 50 EMA. Nope. That rule checks in. That self-discipline checks in, right? That understanding of what actually works checks in. Based on my journal, I go, no, listen, I can't fight that 9. So what am I going to do? I'm going to stay patient. And when I make that decision, I'm basically accepting the fact that I may miss a trade. I may miss a phenomenal setup here, right? It could absolutely rip back up to open print. I might miss that. I'm okay with that, right? See, that was a massive, massive breakthrough for me when I started to become okay with missing setups, right? Because what happens is when you see a setup and you go, oh, well, I got to stick to my rule here, right? What happens is you don't enter into this, and then you see this happen. Boom, she snaps. She comes up to the EMA cloud. This is where we enter short into the market on this candle right here, this red candle, right? I'm going to draw a little oval around it. So this is where I first got into the market, right? It looked like this. And what I'm doing here is I'm playing the 1 hour trend, right? I'm playing the critical level, right? I'm playing my moving averages, right? And more importantly, I'm playing the weakness I just identified at the critical level. If this was starting to be strength by buyers, this is weakness. I want to trade with sellers. I want to keep my eye on the overall picture of the market, which is we can see 555 today. Where do I want to get in? Where do I want to put my stop? My stop is going to be right above previous day low. So I'm risking here about, let's see, 50 cents to make a potential $3 move, right? That fits all my criteria. So we enter short into the market. I'm going to whip out the 2 minute over here. Okay, we enter short into the market. Another thing I want to show you is look at that 2 minute 50, right? The 50 is that purple line. We get back above it. And once again, I won't long the market because that 1 hour time frame, and then we lose it. Buyers lose it. I end up taking the market short on this red candle right here, right? Because this red candle wiped out the bottom of the previous green candle. That's what I call a GBI, green bar ignored. In the market short, my stop is above the 50 EMA. It's above PDL. Look what happens. We come up to PDL. I'm literally about 2 points away from stomping out, and then she starts to sink, right? And notice here, guys, we get another beautiful green bar ignored below the critical level from the previous day, and we capture a glorious move straight down to 555, right? So what did we learn from this video? We learned that moving averages help us gauge the momentum of the market, right? What else we learned? We learned that critical levels help us understand who is in control, right? And number 3, most important thing is we learn to go through our journal, develop criteria, rules that will help us remain disciplined, focused, and effective. Hope you guys enjoyed this lesson. Drop comments below. I'm very interested to hear what you guys think about moving averages. I love all of you. I'll see you in the next lesson.